Hey everyone, this is Chart Sniper again with a weekend review of the overall markets, some indices, and some individual stocks. So last week has been mainly a consolidatory week, and we will take a look at what exactly happened and what might be in line for the upcoming week, which is from January 31st and to the February 4th. We have a month change on Tuesday. What it means is new funds will be flowing into the market. So we might see a potential bounce tomorrow, Monday, and follow up on Tuesday. And then they'll decide whether to kind of book some profits on that bounce or kind of sell off on that one. Okay. So let's take a quick look at all the major indices that we have, starting with SPY. So what happened over last week was a sideways consolidation after a big down move. What you see is 5 days of consolidation, and we have not made a new low for the week, which is good. And we also were range bound. Wednesday was a Fed meeting, and we are still within that Fed day range. So I think it's better for us to wait until it either breaks higher from this range or breaks lower. Uh, until then, I think we are going sideways. Okay, so we have been consistently below 200 days average, and that is not that constructive. And I think next week would be very telling whether we would be able to kind of bounce back above the 200 days average or not. And we are also within the 38.2% retracements of this entire pullback, which means it's still a noise. There is no clear direction as such. Okay, so the candles from the volume perspective has been, a slowing sell-off, a decent buy candle forming the bottom there, and then on Friday a decent upside volume also. Okay, so with that in mind, let's go and quickly look at weekly how it did. Okay, so we almost pulled back to the cloud, almost, I would say, and we lost the 50 weeks average, which means almost 1 year range, correct? And also we lost the Bollinger Band. We reclaimed that 50 weeks average, and the overall volume for last week, there could be a lot of selling, there could be a lot of buying, but overall volume of last week is very, very high. Okay, so that is very constructive because there was a strong upside move after the bottoming formation. We can consider all that as, buying volume for this case. Okay, so on weekly perspective, we would like to see at least go back to the 5 weeks average, which might be around 50% retracement. So that will be a next logical step above 38.2 retracement, right? So it will try to go there and then decide what it should do. Okay. So we'll be looking at 450 as resistance, around 10 points from here. So that would be a decent decision zone where the bulls and bears fight and make a decision on the direction. Okay. So overall, as of now, we are still 8% pullback level from the all-time highs. So not that bad as such. So let's switch gears to see how QQQ has been doing last week. Um, it had moved quite a bit down when compared to SPY as such, and we are looking at similar kind of pattern, a little bit lower highs throughout each day, and then sorry, lower lows and then lower highs also. But good thing is that we kind of pulled back and closed a little bit higher bullish in bullish terms on Friday, so that is good. We are still far away from the 38.2 retracement, so we have 362 as the next target. We are still a lot far away from the 200 days average, which is at 365. So minimum at a minimum there will be a bounce to 365 level if you would like to position for that 15 point move. That will be a very nice risk reward into next week, which is close to 5%. 5% rally. So that is what I would like to see it go to 200 days average very quickly. Um, yeah, on weekly levels, when we look at it, it touched the cloud, bounced back, and decent volume, and we it is still below that 50 weeks average, which is around 358. So that would form the first resistance, 358, and then 365 would be the second resistance. And QQQ has to bounce quite a bit when compared to SPY. One ray of hope in these indices is Dow Jones has been really strong, and it just pulled back. It's just below 6% from all-time highs, and we are looking at very very decent bounces. As you could see, all the things were higher highs. Sorry, higher lows, and three of those last week were kind of higher highs. So this is a feeling very very strong. So any 30 stocks that you see in Dow Jones probably might be a good play when compared to other stocks in the overall market. And we are looking at a daily still below 200 days average. So we would like to see it go above that and probably gain some strength. It gained back the 50 weeks average. So almost all the indices are looking from that context purpose except QQQ for 200 days average test or 50 weeks average um, reclaim of 50 weeks average. And let's quickly look at IWM. And IWM has pulled back significantly, and it is in a bear territory, and we are looking at some extreme levels overall when we compare it to the entire last year's range, I would say, and we are still far away from the 38.2 retracement. We touched 100 weeks average, and we have a lot of levels. It's too far away from 200 days average. Okay, and there is this dead cross happened between 50 and 200 days average. So if this is a bottom in IWM, then you would see a vigorous upside move to play a catch-up trade uh, into the new sorry, when compared to the other indices. Okay, so let's go and quickly look at a longer time frame for IWM and see what exactly the previous year has been. This previous year has been a sideways consolidation, and now we pull back. So that gives a buying opportunity. We pull back all the way to 100 weeks average, which is a approximately turns out to be 2 years of average. So I think it deserves a bounce at least back to that 50 weeks average, and then decide whether to pull back or not. So huge sell volume, and yeah, you'll see those kind of weekly candles, very big green weekly candles, if it has to bounce and align itself with other indices. So that's pretty much about the four major indices. DJI looking strong, followed by SPY, and then QQQ and IWM. Let's go and quickly look at VIX, what it has been doing, and it made a very very long-term high, and this level I think let's go and see in the monthly context whether it or weekly context I would say. Yeah, it made a new high for the overall 3 years range when you compare it with recent highs, and it quickly gave back all those gains. Okay, so what it means is probably a temporary bottom could be inside, but until as long as it stays above 27, actually as long as it stays above 20, it's still a risky proposition. So what it means also from option traders perspective is volatility is very high, option premiums will be very high. So I want you to be aware of that whenever you are paying for calls or even puts, you're paying hyped up premiums. I would like to see it below go below 25 and below 20 to suggest a reversal in the overall market. Okay, SKEW came back below 132, which is good. It's actually staying towards the lows of it, so I would want it to see closely going to 120, below 120 for a continued slow grind higher setup. Put call ratio. Put call ratio, when we go and look at it, yeah, it's been high. It's 1.05, 1.15. These are very high levels, and it happened on December 3rd. And back here, so which means a lot of put buying is there, a lot of fear is there, and that itself probably gives a reason for the market to continue the slow grind higher, or at least not make any new lower lows, because everyone is positioned by buying puts for a market move downwards. Now there is no advantage for market to go in the direction of what everyone is thinking. So there is the contrarian trade here. It will stay afloat at least for a week before it probably decides whether to go lower or not. Okay. Overall, we are not out of the woods, right? When we did know that we are at least doing better, at least when we reclaim back 200 days average. Ideally, we reclaim back 200 days average, we test 100 days average. That would be happen at a minimum before a next leg lower. Overall, this is still bearish theme. The entire situation is not that great for bullish markets. So we would like, there might be a bounce if you are positioned with a heavy exposure when it visits back the 100 days average. I will want you to look at for some opportunities to trim down, reduce your portfolio, um, and there will be a narrow range here. Whether it would like to do a V reversal that happened here, as you can see, it bounces back to 100 from 50, and then it goes and checks 20, and then it moves above that. Okay, this is on a weekly level. And when we go and look at a daily level, let's go and look at what happened in 2018. So that's closely what you can compare it to. So let's go back to 2018. So what happened in this 2018? So we pull back to the 200 days average, okay, and we also stayed around the 200 days average for about a few weeks, and then we moved above the 200 days average and went to all the way to 100 days average, okay, and never went above 100 days average. We lost 200 days average again. We did another effort to go to 100 days average, and no, it could not go, right? And then what happens finally after such a consolidation below 100 days average, there is a final pullback. Okay, so this is kind of a capitulation kind of move that happened in December, and this is what when the reason why I'm showing this is how it could stay below 100 days average and be bearish for a longer duration of the time. So this is from October, and this is all the way until December. Okay, so let me get an image. So what we are looking at here is the similar kind of the same chart in 2018. What exactly it did? So it stayed below. It moved below 200 days average. It stayed below 200 days average for a few days, and then it bounced back to 100 days average. So overall, 15 days from the point the big pullback started, and then later got rejected by 100 days average and spent 12 days average again moving lower, and 8 days playing a bounce, 1 month of again consolidation until the next bounce, and then finally 1 month of severe pullback. Okay, so this is October, November, and December where it bottomed. It could be the same thing here also. January pullback, and then February sideways consolidation, and then March deep pullback for a further higher. This is the worst case possibility I would like to kind of walk through based on what happened in 2018. It doesn't mean it will happen again. So there is no such thing like like I was just wanted to show such worst case scenario where the market could continue staying lower for a longer duration, and I don't want you to play aggressive bullishness um, for a longer duration of the time. If you kind of buy the dip when there is a bounce to 100 days average, book profit. Don't sit on those things hoping for a longer